Uh, with that, let's move on. Just about 15 minutes before we start getting our pre-open rates, we have Deven Choksey joining in for some ideas. Deven, thanks for being with us. I'll start with the big event. Everyone's talking about this whole tariff business. We'll eventually get that number. Let's start with the pocket of the market that has the maximum amount of exposure. I mean, textiles is still a smaller part of the market, but pharma is big. A lot of these companies are exporting to the US. What would your advice be? Have you been advising clients to reduce exposure at all?
Yeah, good morning, Survi. Well, we are of the view that the pharma being an essential item, probably I think the tariff business would be the least, I think, which will get impacted with as far as the pharma is concerned. And maybe I think we are likely to see some corrective actions, I think, happening on that front, at least if not others. Because I think that's where probably US is largely dependent, including the healthcare industry is completely dependent on it. So I don't think that I think it is going to be changing big time. Maybe some indirect impact, I think, which we are not fully clear about, and that includes the duties on the chemicals, which are basically getting applied onto, could possibly have some impact on the input cost side. But that is something which we would not like to speculate at this point of time. Let the game get played out a little bit more in detail, and then probably I think one could take a view. But as of now, no negative news per se on pharma, particularly the companies which are with the specialty generics, the clients model is continuing to do well and they will continue to do well. That's what we believe.
Yeah, all right. Hi, Deven. Good morning and good to see you, Ben. Deven, what about Hindalco? You know, they had their analyst meet where they laid down their guidance and everything looks very, very good. You know, they're talking about being prudent in capital allocation. They EBITDA per ton of Novelis. There is a path set out where it moves from the last reported, $450, $500 per ton, all the way to around $600 per ton. The problem, I think, is going to be on the capex they've lined out. For Novelis, $5 billion, no worries. On India, though, earlier they were talking about around $1 billion or thereabouts. Now they have increased that because they've put on a couple of, plans for the India business itself. And sometimes in the past, I've seen that the stock gets derailed just in the near term because of this capex going up. What's your view on the stock? If it dips today, is it a buy?
Yeah, good morning, Nigel. You're spot on, absolutely. I think the experience says that whenever the commodity companies gets into the capex program, till the time the capex gets completed, the stock prices goes nowhere. Maybe I think it forms a range, and within that range, it keeps on moving. And that's what is likely to happen. The expansion program, as you rightly indicated, both in Novelis as well as on the domestic front, is basically sounding quite steep as far as the spending is concerned. And it is going to take a good amount of time before we just start getting realization out of it, maybe 27, 28 financial year. So from that perspective, I would like to think that the stock probably would remain in the range bound movement, I think, going forward. We don't have much view at this point of time, even of the commodity prices, given the kind of disturbances that we have in the global markets. So as a result of which, I think we would like to play a little bit safe. Maybe I think the market is giving opportunity at lower level for traders, but I think that's not one at this point of time for Hindalco as I see it. One will have to look at it, I think, from that perspective for at least next 2 years. The stock could remain in the trading range in this particular period.
This entire telecom, Deven, morning, telecom was in focus yesterday, right? I mean, Voda Idea, 20%. I think Indus was up about 5-6%. Bharati, of course, is everyone's favorite name there. Any thoughts here, Deven?
Prashant, good morning. Well, I think I asked a fundamental question that yes, you converted the loan into equity, agreed. The repayment part is to a greater extent taken care of, definitely a breather. What next? The CapEx program. You already have 5G implemented by the competitors, and the company is still rolling out the 4G in some pockets, and they are talking about implementing 5G. It's going to be a major CapEx program, and this program has to be funded. So one will have to be interestingly watching it out as to how this is going to get funded and how exactly the resultant benefit coming out of this particular program for the company. In my viewpoint, the re-rating might happen in the market because this market has a habit of finding some stocks, I think, at lower levels. But I don't think that the fundamental changes beyond a point. The breather is definitely there on the repayment side of the loan, but certainly I think the performance, profit performance, will be one thing which we'll have to look out for. So for that, I think one will have to definitely argue for the valuation at that point of time. We'll wait. I don't think that except momentum, we'll buy into the company on a fundamental basis, particularly Vodafone ideas.
What about trend, Deven? The stock was at 8,000 rupees, came down to 5,000 rupees. In the last couple of trading sessions, actually the stock has seen a good bounce. Even yesterday with the market ending at the low point of the day, I think the stock was up close to around 5%. One element could be that the number of stores that were added in the past quarter was better than what the street was working with. What's your take on the stock added on this 5,400, 5,500 rupees?
Adequately priced, as I see it. I think the valuation's not cheap, and I think most of the store opening, increasing the footfall, adding into the top line and the profits, everything is being factored into the price at this point of time. So maybe I think the market gets a little bit more excited at this point of time, largely because some part of the momentum was seen returning back in last 15, 17 days in the market, and that's where probably I think some of the momentum activities are happening in counters. But on the valuation side, everything is in price. Unless I think we see meaningful time correction, probably one would not like to get into it in a hurry.
Deven, so let's just consider one scenario that today we hear about tariffs, and I mean, there is kind of peak pessimism, and then maybe the environment turns a little constructive. We don't know. I mean, it could go completely the other way. There's no real playbook here. But if that is the case, what do you think will do well from here? I mean, how to position for more constructive markets in your opinion, in your coverage universe?
So yes, Prashant, I think it's very important point, and we keep on fielding this situation daily. The past experience also says that I think whenever these kind of storms have happened in the universe, I think we have strongly come out with we come out very strongly and we remain in the winners in this particular game. I believe that I think it's going to play out that way. On one side, India is structurally bringing down the cost. We are having the renewable participation happening into the energy cost. Today, the captive power is available at a cheaper cost, and I think most of the main power companies are main manufacturing companies, be it in the area of metal, be it in the area of refinery. They have started getting benefit out of it. So structurally, we are bringing down the cost structure. Even the logistic cost structure, I think we are bringing down in the country. So in a way, if you look at it, manufacturing sector will remain quite competitive, and that's what we try and see in our portfolio stocks, whether the companies are getting benefit out of it. I don't think that the tariff business is going to play out for a longer period of time. Maybe a couple of quarters, you are likely to see some amount of jerks and maybe adjustments. But beyond the point, I think that the companies would try and adjust themselves. And that is a good part. I think we see the really strong India coming out of this particular tariff implementation activity. And that's where I think we believe that strong companies, companies with a proper approach on the cost structure will definitely remain winners or emerge as winners.
Which ones, Deven? You mentioned names, I missed it.
I didn't mention name per se, but maybe I think some of the companies within the heavy power users, particularly the metal commodity companies, the refining companies in particular, and some of the manufacturing companies who are basically resorting to the captive power are likely to be the winners in the near term as far as I think their cost structure is concerned. And we remain distinctly positive on the possibilities on that side.
All right, fair enough.